The Dow
Thank you.
Transports, 12-week win streak in a row. Do you think that is some kind of great fortune or fortune teller crystal ball on how things are going to look down the road?
Yeah, it's a good leading indicator, and it is very consistent with what you're seeing from the economic data and very consistent with what you're hearing from policymakers, which is ongoing support. And so when you're trying to assess markets, if you ask yourself the question, what's the direction of the economy? In many ways, it's accelerating, right? It's hard to find data that doesn't suggest it's accelerating. What's the direction of policy? Very accommodative. That's a good backdrop for risk assets, and the Dow Transport's leading that.
What's the biggest risk, Brian, that you see out there right now? We got sort of Russia amassing on the border of Ukraine. We got China flying fighter jets over Taiwan. We got Iran and the nuclear talks there. We've got COVID that is still surging in certain parts of the world and a couple of states. But what do you see as the biggest risk for our viewers and our investing audience right now?
So you've got a base case that's very optimistic, and you've got two tail risks. And one of the tails is that the pandemic comes back and these new variants surge and leads to another slowdown in the economy. I would put that at hopefully a lower probability than we would have prior to the vaccines. And then the other risk is, of course, that this thing overheats and you get inflationary pressure, and the market starts to assess that the Federal Reserve is going to have to raise interest rates sooner than you may have otherwise expected. And that would mean a flatter yield curve, a stronger dollar, and a bit of a risk-off period. I don't assign a very high probability to either disrupting markets over the remainder of this year, but those are the two big risks. And we saw what happened with markets a handful of weeks ago when concerns of inflation picked up and the disruption that you saw in some of the speculative growth names. So we could see that again, not base case, but that's the risk that lurks out there.
Well, I'm reading a lot of stuff, probably the same stuff, Brian, that you're reading every day, the economic notes, whatever, from Morgan Stanley or Goldman Sachs or JPM, whoever it may be. And there does seem to be a lot of chatter. They're not calling it necessarily, but a lot of talk that the Fed may have to raise rates or will raise rates sooner than we think. They won't be ultra low forever because inflation is heating up. Unemployment is just back to the level of 2014. That they may have to change their stance and right quick.
So a couple of things. I mean, the Fed continues to believe that it's transitory and so inflation. And so we know there's a lot of pent up demand that's about to hit the economy. The question is whether anything structural has changed as you move into 2022 and 2023. Currently, the Fed still believes nothing structural has changed. I tend to agree with them. I don't believe you're about to see an inflationary spiral as we move out beyond this year. Obviously, you'll have a pickup in inflation this year because of the pent-up demand and because of the basis effect. So that's one. The second is investors need to assess what it would mean for the Fed to raise interest rates. I mean, there's always sort of this freak out moment when the Fed raises interest rates for the first time. And there's no doubt as the Fed tightens policy that you'll see the usual trappings for the market. You'll see a stronger dollar. You'll see volatility emerge. But the question would be, does that represent a buying opportunity, or is that the end of this cycle? Are we just going to hasten this cycle significantly? I would argue if the Fed had to raise interest rates earlier on, it would resemble the taper in 2013 or a rate hike in 2015 and not the end of the cycle.
No, it doesn't. In fact, history shows, Brian, that in most rate hike situations, stocks can and will go up because it also generally signifies a much strengthening economy. This whole, if rates go up, we're doomed. Maybe for certain growth sectors, right? Maybe for certain sectors that rely on ultra low rates and the rotation trade, whatever. But it doesn't mean the overall markets cannot go up or will not go up.
No, it's not the first rate hike that matters. It's the last one. And cycles end typically with some type of policy mistake, where the Federal Reserve pushes rates too high, the yield curve inverts, credit spreads blow out. I mean, I would argue, Brian, we're a long ways away from that. So, investors look at what's transpired. They look at what's gone on with the market. In many ways, they start to assess, is it too good to be true? Does something ominous need to be lurking? We're still early days of this cycle. Are there risks? There's certainly risks, but I would expect this cycle to play out over multiple years, not to be concluding anytime soon.
Shepard Smith here. Thanks for watching CNBC on YouTube.